Okay, hi everybody. I am Nadira, your moderator for today. So today's topic will be strategy during bear market, and I will explain a little bit what is a bear market. So a bear market is when a market experiences prolonged price declines. This is the moment where most retail investors are nervous, fearful, and also depressed about their portfolio performance. However, it also presents wonderful opportunities to savvy investors to buy investment grade stocks on the cheap. And as for your information, today webinar is brought to you by Bursa Malaysia and also managed by Live Chat. So before I begin my webinar, let me read the disclaimer first. The information in this webinar is for general information purposes only and is provided on an as-is basis without any representations or any warranties of any kind. The information also does not constitute any legal, financial, trading, or endorsement regarding any and all products mentioned. Bursa Malaysia Group of Companies and the presenter do not accept any liability for the information provided during the presentation and in the presentation slides and for any investment for trading decision made on the basis of this information. So let me introduce you to our speaker for today. Our speaker for today is Mr. Johnny Tiong. Mr. Johnny is an engineer and also an investor. He has 10 years of investing experience and has been an active investment blogger since 2015. He also hosted stock investment sharing sessions and investment courses in Johor, Kuala Lumpur, and also Sarawak. So for the vision and mission for today is that he wants to trigger the importance of investment knowledge, energy received, energy return, which is bringing positivity to the society to inspire young people enthusiasm for stock investment and also to convey the message of investing can be done by anyone, anywhere, and also anytime. Now I will pass the control to Mr. Johnny Tiong.
All right. Yeah, good morning, everyone. Thanks, Nadira. So I'll be sharing my screen. So just let me know if you can able to see my screen. Can you see Nadira?
Yeah.
Yep. Okay. Okay. Thank you. So thanks, Nadira. So good morning to everyone in the webinar today. So it's a Thursday, and our voting day is gonna start. We're gonna be on this Saturday. So, but before that, let's go through this webinar. Okay, so what I'm gonna share today is basically strategy during bear market. Okay, so let me just have my pointer out. Okay, so first of all, thanks to LiveChamp, thanks to Bursa for organizing this webinar. And I think nowadays, especially our stock market is not as attractive is not as attractive as it is if you compare to a few years back, okay, due to COVID, and then there's a lot of political instabilities in our country, so our market tends to go down. Okay, so later in our this is my table of contents, so later I'm going to share about the definition of bear market. Okay, and also I have some data analysis from 1997 until 2022, which is this year. So the most important gist of our webinar today will be techniques or strategies that we can apply during a bear market. Okay, then after that, we're gonna do a demonstration on the ETS, okay, the equities trading simulation. Okay, so without further ado, let's start our webinar today. Okay, so for those of you, whether do you remember, if you remember, you see this quote is more or less your age and my age is more or less the same. Okay, so those who cannot learn from history are doomed to repeat it. Okay, if I'm not mistaken, this quote is we get this is a quote from our history book in secondary school. I'm not sure is it form 1 or form 2. So there's a quote at the cover of the page. It clearly mentions that if we do not learn from history, we're going to repeat it. Okay, so that's why it's very important, especially in stock investment, for us to study what had been happened. It might not happen in the future, but it can be always be a case study for us. Okay, because the world is changing, everything is changing. Okay, from I remember from there are no bitcoins, or what do you call it, the cryptocurrency, but now there's a lot of cryptocurrencies booming out, so those also affect our stock equities investment for this day. Okay, so it's always important for us to understand the history we try to have an analysis on that, try to get a study on that, and then most probably 50 to 60% it will repeat again. Okay, so we must make sure that we do not repeat the same mistake what we have done. Okay, so next page, I'm gonna talk about the definition of a bear market. Just now Nadira mentioned, so it's a prolonged drop in investment prices. Take note of the word, it's actually investment prices, it's not the economy. Bear market is only applied in stock market. Okay, whereas in the economy is no longer called bear market, it's called a recession. Okay, so bear market, a bear is happening only in the market. Okay, recession is in the real economy, in the world. Okay, so bear market happens when an index market falls by a certain percentage. For example, 20%. 20% is a general number used by the world. Okay, bear market happens when an index falls below 20% or more from its most recent high. Okay, this is a definition whereby we can get from around the internet. Okay, so how does bear make bear market affect the retailers or investors like us? So they will affect our emotion. So all of the investors or retailers will be more pessimistic. Okay, and then we will be in the low confidence. Even the market is high or low, we will be in low confidence. Okay, so during a bear market, investors often seem to ignore any good news and continue selling quickly, pushing prices even lower. Okay, so I'm sharing my experience from when I in 1997, that I'm still studying in primary school, as well as 2008. Okay, that time I'm in university. So even though when we are young, so we can see from the reaction from, let's say, from our parents, from the people around us, so how this bear market actually affect everyone. Okay, it's something that um we can notice even though from our parents or our peers, the expression. Okay, so when bear market happens or when recession happens, so investors carefully watch a few key economic signals such as the hiring rate, the wage growth, the inflation, and also interest rate to judge when the economy is slowing. Okay, so these are a few key economic indicators that we can look for. Okay, so next I'm gonna proceed with my next slide. So maybe you will be asking me, when is the bear market, and also how do we know whether it's a recession? Okay, just I mentioned two parts, right? Market for 20 below 20% is a bear market. So recession is dependent on some of the GDP data, some of the key economic signals that we have. Okay, so this must be wondering, you must be wondering, okay, when is now the bear market? So if it's bear market, what should we do? Okay, so these are a few pictures. Okay, these are a few hypotheses that we put inside our webinar today. So in terms of technical indicators, is it when our simple moving average 200 depth cross our simple moving average 50? When why I put simple moving average 200 and also 50, this is some of the common indicators that a lot of chartists are using. So in order to know that it's a bear market, they normally plot a simple moving average 200 and also simple moving average of 50. So from that, when 200 cross over 50, then it's a bear market. This is just a common, very common definition in terms of technical chart. So in terms of the economic analysis, so is it when our GDP is negative? When our GDP is negative, meaning to say we have recession, right? Okay, so bear market, okay, bear index is normally one of the leading indicator which tells about our economic analysis. Okay, so normally later I'll show you an example. I'll have some case study whereby when the index falls first, after that, when the index fall below 20%, next year our GDP will be in negative and then the recession comes. So actually, chart is one of the leading indicator, right? So bear market, is it when our GDP is negative, or when you go to the market, go to the pasar, you heard a lot of those aunties and uncles in the pasar talk about stocks market. Okay, I remember this thing is because when I was young, when I go to the market with my mom, so I even heard those in the kopitiam uncle sitting there. They also talk about what the stock market. Well, which never happened before. So I tend to have an intention, tend to have a thought when those uncle aunties talk about stock markets in the kopitiam in the market. It is actually signaling that a bear market is coming. Okay, this is my own interpretation. Okay, because you have more and more people talking about the market. Okay, so is it bear market happens when a lot of your circle of friends suddenly talk about stock investing? This brings me back to 2020. Okay, when the COVID happens, when everyone works from home and then everyone got nothing to do, so they venture into stock market investing. So like my friends, a lot of them, they are not interested in stock investing. Then suddenly when COVID comes and they are free, then they talk about stock investing. So this is actually quite interesting data. I'm not sure it happens to every one of you, but it clearly happens to me, as suddenly there's a lot of people talk. I mean, in my WhatsApp group, suddenly a lot of people talk about stock investment, especially those time the hottest will be the glove counters. People are sharing, people are discussing, and then there's a lot of people talk about that. Okay, so when a lot of people talk about stock investment, so is that a signal of bear market? Okay, and yeah, so what I shared above is just my assumptions. So I'm going to take some realistic real data, and then we try to interpret and validate our hypothesis. So that's why I have a data analysis from 1997 to 2022, which is to the current year. Okay, so okay, but let's take a step back. If we want to validate something, we definitely need a set of data, and then we do some analysis on the data. The world now is full of data. Everything is data driven. But how do we use or synthesize or analyze the data? That's the most important. Okay, so now we start off with technical chart first. Okay, so as you can see, okay, there are two sets of for my webinar, I'll be using the chart from Chart Nexus, in which later I'm going to demo using Chart Nexus. And then some of it I'll be using from Yahoo Finance, and also I'll be using from Trading View. Okay, so when we look at this this slide, so you see I have took a label 1997 to 2000, and then the below is 2000 to 2000 and 2003. Okay, so this is a chart. Notice that I actually put in two indicators, which is the simple moving average of 50, which is the blue color, and then simple moving average of 200. And then this is a chart of Candlestick, which is our FBM CI. So in 1997 until 2000, you can see our chart, our FBM CI is actually falling down. Okay, falling down and then it climb up. So if we only look at the chart, it doesn't tell us anything. So that's why we include simple moving average of 50 and then simple moving average of 200. Okay, which is a part of our chart analysis. So just now we mentioned when simple moving average 200 depth cross over simple moving average of 50, then it's a bear market. So from here, if you see the red line cross over, depth cross over a blue line, then it's a bear market. Okay, so if you see from 1997 June, okay, so when it's a crossover, then it is a bear market for around 1 year, 1.5 year, 1.5 year. And then after that, only our chart, only our blue line go across our red line. Okay, so this bear market continues for around like 1.5 years. Okay, so during 2000 and 2003, there's also a bear market, but then the duration is shorter than the 1997. Okay, so we see the red line cross over the blue line, and then there's a bear market for around around 1 year or so. Okay, and then after that our blue line cross over. Okay, then there is also a bear market. Okay, when our red line death cross over our blue line and at the Q3 of 2022. Okay, so after that it continue bull. You see from 2023 until 2028. There's 2023 until 2028. So it's a 5 years of bull market. Okay, then in 2008, that's when something happened in Europe. Okay, then we have a red line cross over the blue line. See, okay, then it had the duration is like, I think it's around like one year or so. Okay, until 2029. Then after that, we have a golden cross whereby our blue line, which is our simple moving average 20, crossover simple moving average of 200, crossover, and it goes up until, okay, until 2011 quarter three. And then there's also a small bear market. I mean, just a short range, maybe just around like half year. Then after that, continues to bull. Okay, to have a bull market from 2012 until 2015. And there's another bear market. Then after that, bear for a long time from 2015 until 2017. I mean, at that time, because the oil price is going low, and then also we have in Malaysia the political issues also, so it actually goes sideways, so up and down, up and down, up and down. Okay, then after that there's a there's a bull. Okay, when the crossover simple moving average 20 to 500. Okay, sorry, 50 to 200. Sorry, and then after that there's a bear market, which in recently, and then there's a COVID, and then yep. So what I want to say is actually, in terms of technical chart, normally people use 50 and 200. So if we see there's a crossover when 200 crossover 50, so there's a bear market. So there are two ways of handling. So one is, if we don't have any time to monitor, we just stay put, no need to do anything, keep cash. Another thing is, if you have a lot of experience, if you read a lot, if you have a lot of information, you can be in the market. Okay, so this is the, in terms of the technical analysis, or I say in terms of technical chart that we use in the, that we might use to define the bear market. Okay, so if we look at Yahoo Finance, there's a yearly chart. Yearly chart is actually drawn from January until December. But then for Yahoo Finance, it's different because the calendar year starts at December. Okay, so this might not be a very good type of analysis, but just to let everyone know. Okay, you can also use it in trading view. You can change it to the yearly chart. Okay, so next, now just now we talk about technical chart, then we also talk about a GDP result, gross domestic product. Okay, so we try to connect, I mean, we try to do a link between the technical chart and also our GDP result. So we look at the yearly delta, which is the yearly change of more than 20%. Okay, if the chart falls, just now we mentioned that if the chart falls like 20%, more than 20%, then it's a bear market. Then we compare with the GDP result. Okay, so when I say change, is actually between open and close. Okay, the year that it opened and then the year that it closed. Okay, so here we can see that those, I highlight the one that falls more than 20% as red. So in 1997, there's a Asian economic crisis, so I put it as red. And then 2028, the Lehman Brothers, so which is where our index fall more than 20%. And then 2000, there's a bubble, techno bubble, but then that I put it yellow because it's less than 20%. Okay, then if I compare to the GDP result on my right, okay, so we try to do a link. You see, 1997, when our chart falls more than 20%, in which specifically in this year falls at 52%, and then our GDP is actually negative. Okay, so when our GDP is negative, it's actually an economic recession. Okay, it's actually an economic recession. So so you see, when we do the link between the chart and also the GDP result, okay, so when it's red, when it's red in the chart, and it's red, it will be red in our GDP result for the next year. Okay, so next we look at 2008 and 2009. 2008, our chart falls below 39%. It already tells us something gonna happen. So in our GDP next year, subsequently is a negative 1.7. So if we compare, it's a negative for our GDP, even though in 2009 our GDP is not as bad as our 1998. Okay, so also take a look at the yellow ones. So the yellow is less than 20%. I mean, the the chart falls less than 20%, and then the GDP result is actually 0.6. Okay, so if we try to link the information, we turn the data into some analytics. So you can see there's a two chart here. There's two type of chart here. Okay, so we have these bars, green bars, red bars. This is actually our GDP result. GDP result, and then we look at the indicator on the right. Okay, so we have GDP 7, 8, 9, 10. Okay, so another one is a line chart, which is the index movement, in which we are taking care, we're looking at index which have changes in how many percentage. Okay, so we look at this line chart. So just now in 1997, our chart, okay, falls 52%, and then next year our GDP result is negative. Okay, then after that in 2008 we fall 39%, and then our GDP result is actually negative. Okay, so this actually tells us something. Index is a leading indicator for our economy. Okay, chart tells us first before the economy tells us. Chart tells us that there's a bear market coming, more than 20%. It falls more than 20%, and then next year our economy will be having recession. Okay, this is what happens in the past. Okay, but then things to take note: when there's a bear market, there's always a bull. When there's a sharp fall, there's always a rebound. There's always coming back stronger. Okay, so this is the analytics for 1997 until 2010. So now let's look at the current one. So we look at the data from 2010 until current. So there are no significant drop which falls more than 20% in the index. If you look at the index, I mean, when I compare against the open and close, so there are not much significant which drop more than 20%. Okay, in terms of our GDP, we are healthy above our healthy in positive only in 2020 when we have a negative 5.6, but then that year is also not a recession. Also, there's not much difference. It's just because of the oil price drop, and then with the COVID, all those things. Okay, so if I turn it into analytics into the chart, so there are not much. Okay, even though we saw that there's an index movement of -6, -4, -3 during 2014, 15, 16, is also because of the oil price and then the political instability. Okay, and also we have the US China, the tension between, so which also affect us in the market. So for those who are active in stock market, these few years, I mean, especially in 2018, 2019, 2020, there's a lot of people suffering losses also because the market have been going sideways. So there's not much opportunity. Okay, so what I want to say is that the index actually is a leading indicator for our economy. Okay, so do you notice that every time when there's a bear market, then the bull will come next? Just I shared just now. So when there's a bear, okay, let's say when the index fall below 52%, then next year the index gonna be very sharp, go to 40%. When 39%, also to around like 40%. So when there's a bear, there's always a bull. Okay, it's just like an yin and yang. Okay, so when there is a bear market, bull will come next. Definitely. We just need to wait for the bull to come. Okay, so this is an our FBM full stretch from 1995 until recent years. So we see there's a bear, there's a bear, there's a bear. I mean, and a significant drop. Okay, 1997, 2008, and then also the recent COVID. Okay, then after that, we always come back. There's always a sharp rebound. Okay, like for 1997, it rebound half of it. Okay, sharp rebound, but then slowly it's going up. And then for 2008, there's a sharp drop, and then we go back stronger, we go back higher. Okay, I think now will definitely be the same. If we look at the long term, if I look at the long term, it's actually an uptrend. You see, there's an uptrend channel. There's an uptrend channel more and more people are investing. The population is going high, so a lot of people start to invest. So that's why stock market will always increase. And then there's a lot of tools coming out for investment, also the crypto. So this will also affect the people who invest in stock market. Okay, so where there is a fall, there's always a rise. Okay, so and then the strong comment that we'll see that we need to survive the bear to face the bull. If we cannot even survive the bear, we will not face the bull. Okay, I know a lot when especially when we watch those Hong Kong dramas in 1997 when the economy is down, a lot of people go to commit suicide. Actually, those are foolish action to do, because if we survive the bear, the bull is gonna come next. So do not do anything foolish. We still need to be alert. Okay, even though it's bear, we lost a lot, but it's okay, because we know that after the storm, the rainbow will come, the sunlight will come. That's the time for us to do action to face the bull. Okay, so what do we need to do? We need to constantly stay in the game. Okay, why do I purposely put this picture? Is because, okay, for those of you MU fans and those football fans, you know Ronaldo is one of the best footballer in the world. Even though he is benched, but he still appears in the substitute bench. So what we need to do is constantly stay in the game. Okay, we need to constantly stay in the game to be alert what is happening. Even though now, for example, now is a, I mean, now the market is going sideways. So we still need to read the financial news, go through the annual reports, the quarterly report, so that we know when the opportunity comes, we know what counter we need to take care. We need to take note of that. So we need to constantly stay in the game. Okay. So now we talk about the data analysis from 1997 to 2022. So now I'm going to share about some techniques or strategies that we can apply during a bear market. Okay. So let's focus at the strategy that can be used in the bear market. So I'm be using Chart Nexus. If you have a trading view or also other charting software, it's all the same. Okay. So I'm going to share about a Fibonacci retracement. For those of you who are not expert in Fibonacci, okay, in technical analysis is okay. This Fibonacci is a very simple tool to use, in which we can just drag and drop, and then they can tell us the support and resistance. Okay, so what is actually Fibonacci retracement? So Fibonacci retracement are ratios used to identify potential reversal levels. Okay, okay, keep note, ratios used to identify potential reversal levels. Okay, so Fibonacci retracement provide price levels to which market tends to retrace a portion of a move before the trend continues in the original direction. Okay, for example, a trend will not always go down. Okay, when it's oversell, okay, it will rebound. Okay, oversell, it rebound, but how strong is the rebound? It depends. Okay, some of the rebound is weak, some of the rebound is strong. So the message is, it will not always go down. It will rebound a bit. Either it change its trend to go down further, or to go up, or to go sideways. Okay, this is the trend of the market. The market cannot always go up. Okay, you can, for example, when you are driving, you cannot always just press on your accelerator and go. Sometimes you need to let it go a bit. Okay, just like you're flying a kite, for example, you cannot just fly, and then you need to how do you say it? The analogy of the environment, I mean, things around us, it will go up and down, up and down, up and down. It will not always consistently go up. Sometimes things will happen. We take a breather, goes up and go down. Same goes to the market also. Okay, so for Fibonacci, it can be used to determine the supports and resistance. So there are some sample here. So we have these numbers, 0, 1, 2, 3, 5, 8. So there's a mathematical explanation to this. So, okay, when we look at this number, if 0 plus 1, it starts from the number 0 and also 1. 0 plus 1 is 1. Okay, so 1 plus 1 is 2. So 1 plus 2 is 3. Okay, 2 plus 3 is 5. So this is all how the mathematical evolve, starting from number 0 and number 1. Okay, so for example, we take a number 55. So we use 55, we use 34 to divide by 55, so it's 0.62. If we use the previous number 21 divided by 55 is 0.38. I'm not going to explain the mathematics of this. I just want to make sure that everyone knows how to use the Fibonacci, and this is just some analogy behind the Fibonacci. So 62 and 38%. Okay, so there's a golden ratio to actually this Fibonacci. There's a lot of things you can read about it. There's a lot of scientific justification, scientific analysis, scientific research done on this. So we're not gonna go through those. We just look at how do we use it in the chart, in the technical analysis. Okay, so I'll be demonstrating the Fibonacci retracement using chart nexus. So for those of you who are familiar with chart nexus, you can use your chart nexus, and then I will teach where do we actually get it. And then for those using trading view, later in the ETS, I'm going to share where can we pull out or where can we summon or surface out the Fibonacci. Okay, so in chart nexus, this is the view that we have. So we can click on the small arrow and also the Fibonacci retracement. I'm going to demo it later. Okay, so how to use Fibonacci. Okay, so I'm going to share how are we going to use Fibonacci in our chart and in our technical analysis chart. So I'm using an old example. I repeat, it's an old example which happens in 2020. Okay, so this is our top glove. Okay, how do we actually draw Fibonacci is we start from the highest point. Okay, within this chart, which point is the highest point? Okay, so it's around like 9.3, 9.5, so there's a highest point. Then we drag to the lowest point, which is the lowest point. Okay, so we just drag from top to down. So just need to make sure that 0 is on top, 100 is at bottom. Okay, this is a golden rule. 0 on top, 100 at bottom, because different platform, different chart analysis tool, sometimes you need to drag from bottom to top. Some of it is top to bottom. Like for example, for chart nexus is top to bottom. For trading view is bottom to top. So, but then the thing is we need to make sure that 0 stays above, 100 stays at the bottom. 0 on top, 100 at bottom. Okay. So in this chart nexus, from top we drag down to bottom. So 0 on top. Okay. Then we notice a Fibonacci points. Okay, we look at the points whereby we have those golden ratio. 25, 20, okay, I just round up 25%, 38%, 50, 62, and also 79. Okay, so look at this ratio, the Fibonacci points that we have. Okay, let's look at 62%. This provide like a resistance, like a support. And 50 also have a resistance and also a support here. Then 38%, there's a resistance, and saying also there's a support here. And then at the 23%, there's also support and also resistance. So if you look at the chart, so Fibonacci actually helps us to draw the resistance and support, not to say perfectly, but quite making sense. See, when the chart goes up until the highest point, okay, until 9.4, and then let's say, like I say, the chart will not always go up. It will also take a breather, so it will fall back a bit. But fall back to which point? Okay, for example, if a chartist you want to catch when the chart is, you know that top growth will still be growing. Okay, the revenue, net profit, the performance will be still great in the COVID time. I repeat, example, in the COVID time, revenue pumping, people who's those frontliners will keep on using the glove, everything. So it will take a breather, it will fall a bit. Okay, it will fall a bit. And then when do we need to catch? Let's say we want to buy the stock. We're fear of missing out, and then we want to involve in the stock. When is the time for us to catch? So Fibonacci actually helps us to draw perfectly. So there's a 23%, whereby when the stock falls into 7.6, it can be a support point for us to catch. Okay, so in this case, it did falls to the support of 23%, which is around 7.6. Then it rebound up, try to break the previous high of 9.4, but it fails, but it touch a bit, but it falls down again to the Fibonacci of 38%, which is 6.4, then it continues to go up. Okay, so this is how we use a Fibonacci. It actually helps us to decide when is the entry point. When the stock, we know that the stock will not always go up every day. It will retrace and then rebound. Just a retrace point. Where is the entry point for us if you want to get involved in the stock? So Fibonacci is one of the useful tool that we can use. Okay, so now we have a few points here: 23, 38, 50, 62, and also 78. So what is the best point? What is the best entry point for us? Okay. Then a few questions that you might be asking: how to decide a start and end point? So what is the best retracement point for us to get involved? Is it 24, 38, 50, 62, and 79? And then how do I operate, buy and sell? So these are the gist. This is the most important topic or the discussion point that we have for our webinar for today. Okay, so these questions will be answered in our next few examples, but these are all based on my analysis, and it might differ, depends on the market. All right. Okay. Now let's look at some examples in the chart nexus. Okay, so I'm gonna draw out my chart nexus. Okay, so okay, I would like to say that COVID is actually, that year is actually a good year. The reason why I said this is because all the stocks have been going out for quite some time, and then when COVID happens, the stock markets all collapse. So it is like a reset point. It's like a reset point for what had been happening in the past. So it's a reset point, and then we just need to focus on those counters. I mean, as overall when it's reset, so that is considered as a starting point. Okay, so what happened in the past is okay. We just need to take note of those happening in the after the COVID. Okay, so 2020 is actually a good reset point. So if I were to ask everyone in the webinar here, let's just make sure that every one of you are still on the same page with me. Can anyone put in the chat room when is actually the first day of our PKP, our MCO? Can anyone put in the chat room just to make sure that every one of you, because I keep on talking and I'm not, there's no interaction. Okay, I saw a few answers here. So Hanizam correct, March, Azizu 8, yeah. Yep, Azizu and also Karine and John, Jojo, Lee, Zakaria. Yes, the answer is actually 18th of March 2020. So in the chart, thanks for the answer, is correct, it's March 2020. So it's actually like a reset point. Okay, it's a reset point for a lot of the stock. Okay, not only Malaysia stock, but foreign stock also the same. So I'm not going to go into detail, like pinpoint exactly 18 March, but then for us to do Fibonacci, okay, the front part I can just ignore. I just need to make sure that the lowest, correct, Jojo, unforgettable date. Just want to share my greatest achievement during my COVID is actually I managed to catch lizard behind my wardrobe. The lizard had been leaving things, the presents for me for the past few years, and then I'm happy that I managed to catch it during my COVID. Okay, so that's my achievement. So I know definitely all of you have some interesting stories to share, but mine will be catching the lizard. Okay, okay, all right. So coming back to our chart nexus, how do we actually draw the Fibonacci? If you see there's a Fibonacci retracement here. Okay, so I just click on it. Then there are Fibonacci arcs, time zones, retracement, fan, and also Fibonacci projections. So now we're gonna look at the Fibonacci retracement. So from our top glove example just now, I just need to notice the highest point and then also the lowest point. The duration, it can vary as long as we can find the highest point and the lowest point. So this is my highest point. I just click and I drag down to the lowest point. The lowest point will every time will be from the COVID point. Okay, the reset point, which is the March 2020. So I'm looking at this example. We look at Lee Hand furniture counter. So highest point to the lowest point. So after I drag, and then we look at the points here. Okay. Let me just zoom in a bit. Okay. I drag the line so that we can see the numbers. So we have the zero on top, 100 at below. Okay. So we have 23.6, 38.2, 50, 62, and so 78. Okay. So let's just try to see the Fibonacci points set drawn by the Fibonacci. Okay. Sorry, let's just draw. Let's just make sure the line is extended. Okay, it's okay. So this is the highest point. This is the lowest point. Okay. So we look at set 23. So clearly there's some support or resistance here. Okay, you see most of the time the stock at least lingering around here. And 38 also. And then look at 50. 50 sounds like a support. Let's look at the example here. When the stock falls, okay, then it tries to break through the 0.98, the 50%. Then it lingers here for a few moments, and then when it falls, okay, when it cannot break the resistance, it falls down and goes to the next support, which is 62%. Okay, when it goes up, it try to break through the 50% Fibonacci, but then it's not sufficient. It falls down again. Then it goes up. It falls down to 62%. Goes up. Try to challenge, but it fails. Then it fails to break through the 50%. Then it falls down to 62%. And then this is the story of the chart. Okay, so it goes up and down, ups and down, ups and down. So Fibonacci for Lee Hand is actually quite true. I mean, it's quite useful for us to know. Okay, it goes up, falls to 50%, tries to break through, but it fails, falls to 62%, tries to break through 50%, but it fails. So now it's at the range between 62% here. And next, the potential, it can fall to 78%. So for Lee Hand, okay, so later we're going to share about what are the Fibonacci points which we are interested. I mean, which I like to use. Is it Fibonacci 50 or Fibonacci 62 or 78? Okay, so let's take some example for our case study. You know, there are 13 sectors in Malaysia counter. So I'm just going to take a few examples that come to my mind. Just have a sharing, because Fibonacci is not 100% tool to use. It's not 100% correct. It's just we can just use those as an example for us to our day-to-day trading or our day-to-day investment strategy. Okay, now let's look at some financial services that we have. Let's look at our Maybank. Again, Maybank, how do we draw the Fibonacci? We just drag the chart, and then our starting point will be in March 2022. March 2020, when the COVID happens, is a reset, when the reset points happens. So we take the highest, and then, press on the Fibonacci from the highest point. In this case, is around 8.8, drag to the lowest. Okay, meaning to say when COVID happens, it go up, down, but consistently is going up. It's consistently going up. Let's say now the chart is falling. Where is the point that we want to get ourselves involved, right? So if we look at this, okay, 78 seems like is a valid point, and then 62, there's a resistance here, and then the resistance, they fail to break through, then it falls back to 78 and also even to 6 ringgit. Then it tries up again to break through the 62%, successfully goes up to, this is 38%, which is 7.7. Then it falls down to the support of previous, it falls to the support of which is, this support is a previous resistance. Okay, tries to go up again. If you see the points, it's actually perfectly lands on each the Fibonacci points, 50, 38, and then 23. Yeah, okay, if you see that. So for Maybank, okay, one of the things that I notice every time when there's a what the recession or bear market happens, banking stock is one of the counter that we can aim. So there's a lot of banking stocks in Malaysia. So just need to make sure that we aim those that we are comfortable or which we are using. Okay. So if I were to clear all the blocks here, I mean the areas that here, I just draw a parallel uptrend channel, if you can see. Okay, how do I draw the uptrend channel? Is actually I want to connect I want to draw a line which connects most of the point. So in this case, I'm drawing this line because it connects here, it connects here, so it connects here, here also, here also, here also. Okay. So this is one of the reasons that we can take note. Even though there's a recession happen, okay, there's a recession happen or anything bear market happens, banking stock is one of the thing to go because people will after a bear market happens, if you want to start a business or you want to do anything, the first thing you need to go is to the bank to have some borrowings, to borrow, to have loans. So banks actually earn from there. So that when the demand is high, the stock will be going up. Maybe will be making a lot of profit, revenues, net profit. Okay, so this is how we use the Fibonacci. And then the banking, two things here. Fibonacci for the banking stock, and then banking stock is the one to go for us to go. Okay, when anything happens, especially when the bear market or recession happens. Okay, so next example, that let's take a look at the Genting. Genting again, how we draw it is we focus at the from 2020. Okay, so from top down we look at the highest point, zero on top, zero on top, 100 at bottom. Okay, so yeah, goes up, down, up, down, up, down. So let's say if now we are interested to buy Genting, for example, okay, this is the highest point, which in June this year is wants to break the resistance of 5 ringgit 28 cent, but it fails. Okay, so now it falls down to 23%. Okay, so 38% seems like a strong resistance here because for the past 2 years after COVID, the chart haven't falls below 38%. Okay, so it's still, so this 38%, which 4.3 is looks for me is a strong support. Okay, it's a strong support. Okay, so let's look at some other examples that we have. For example, Petronas Chemicals. Okay, again the same analogy from after COVID. Okay, the highest. Again, I repeat after me. Highest to lowest. 0 on top, 100 at bottom. Okay, so let's say if we were to invest in Petronas Chemical, okay, so this is a point, this is at 38 is a point, and then now the stock is around like 23%, which is around 8.6. So you can see the Fibonacci actually help us to draw out the resistance and support. Not to say perfectly, but it's like at a desirable point that we will like. Okay, one thing about when we do on chart analysis, sometimes we will have a lot of lines, but for me, when I want to draw a support and resistance, I keep it simple, less lines, or we can just use Fibonacci. If your line connects most of the dots or most of the points, so those can be considered a strong resistance or strong support already. Okay, so let me just take a few more examples. Let's look at technology. Let's look at them. But before we look at technology stocks, let's look at technology index. Okay, because technology have been one of the hottest we have. So this is after COVID. Okay, so let's use retracement from top to bottom. Okay, so our technology index actually, when COVID, pre-COVID, pre-COVID is just like around like 40 something. So after COVID, our technology usage, our demand for technology actually grows a lot, because I think everyone is aware where COVID happens, then there's a lot of e-wallets coming out, Grab food, the people to use the technology, the demand is higher, whereby our children are having online lessons. Okay, so the demand for technology always go up, but then it will always go up. It will not always go up until a certain point. It will also retrace and then rebound or go up. Okay, so now when we look at this technology index, I mean, it's same. Our technology index is hand in hand with our what do you call that? The Nasdaq. Sorry, it goes hand in hand with our Nasdaq, which is our US in one of the US technology index, the Nasdaq. Okay, so when we look at this, 0 on top, 100 at bottom. So if we look at the chart, goes up. So if you look at it, it's okay. There's a support here, the support. So there's a resistance and try to break through, then falls down, then it go up again. This is the highest point. So then we look at this point, 23%. Okay, it's a support, and then 50% is a support. Then now the stock is lingering around 50%, and then next is gonna fall through to the 62%. So if you look at all my examples just now, I'm actually reclining to, if I were to invest in a stock after the bear market, the rebound point that I will be aiming is at 50 and also 62. This is just my own personal preference, because I started to use Fibonacci and I was quite optimistic. For example, I used to have 23 is a good point, 38 is a good point. But then it turns out to me, in the current trend, in the current market trend, 50 and 62 works better at the current market. Okay, 62 and also 50 is works perfect. There's no such thing as perfect. Works fine for me. Okay, it works fine for me. Okay, and then another thing, yeah, 50 and also 62. So later I'm gonna talk about the strategy, just how do we distribute our bullets, divide our capital, our money capital to invest. It's not like 50% when the stock drop until 50% we go all in. There's no such thing as all in or put your egg in one of the basket. So we need to divide our egg so that each of the basket there's an egg in it. Okay, so later I'm gonna share more, 50 and then 62. Okay, so this is for our current technology index. Okay, this is our current technology index. Definitely, I remember that time I want to buy a new monitor. So that time also out of stock. There's a lot of things are out of stock. I think now even there's out of stock. And then now we have a lot of energy transition, meaning to say we are changing from our traditional oil and gas, to a renewable electric car, or there's a lot of hydrogen driven car. So all those also requires a lot of a lot of technology. I mean, the chips, LED, depends on technology, what side you are talking about, because technology is actually covering a lot of things. LED lights, all those are considered as technology. All those like testing are also considered a part of the technology. Then the chips, okay, the testing of the chips, all those are also considered as a technology stocks. So be careful when we talk about technology. It's not all the technology stocks will be blooming. Okay, like the LED definitely is booming, but those who supply chips also booming. So just need to take note that which technology, okay, technology index, and which section are we talking about. Okay, so example for technology index, let's look at the famous one. Let's look at Inari. Again, I draw the chart. Okay, from the reset point, I call it 2018 as a reset point, highest to lowest, highest to lowest, highest to lowest, 0 on top, 50, 100 at bottom. Okay, So we look at this. If let's say, if we were to invest, if let's say we know that Inari, the business is going to grow, okay, the business is going to grow, and then revenue, net profit is going to be consistent. And then one thing good about Inari is every quarter they are giving out dividends. Okay, I'm not saying that we need to buy or we can buy. This is just sharing some of the fact find or also some analysis that I have on Inari. Okay, so let's say if we were to buy, we want to invest in our Inari stock. So for me, seems like 50 is like a good resistance point, because it had been lingering there around like for the half year. I mean for 1 year. Okay, when it goes to highest 4.1, and then it goes down, and then it rebounds a bit. It rebounds at the 50, then goes up to 38, then still falls down. So support at around 50, resistance at around 38. Okay, so if let's say we have a high confidence that Inari is going to go up, for example, let's say we buy around 50%. So let's assume that it can break a new high. So we have around like 60%. 60% for it to go up. And then let's say we cut loss, it falls to 62. So when we look at the risk to reward ratio, okay, if we operate on this stock, so you like 15 against 60, 15% of risk, 60% of reward, which is 1 to 4. So this is considered as a good risk to reward. In the current market, the best risk to reward ratio for me is 1 to 3. One risk and then 3 reward. Okay, this is the ratio that I will recommend. Okay, so for this, let's say we invest in Inari. Okay, we are waiting for it to fall, let's say around 2.52. Okay, and then the chances of it to go up, we are confident that the chances of it to break new high, a previous high, is okay. The chances, the gut feeling that we have for Inari is high. Okay, so 2.5 can be a good point. Okay, so some example for Inari. So now let's look at some other example. If there's any counters here, we can just put in the chat so that later we can have time to go through it also. Okay, let's look at some construction, Gamuda. Again, I think this will be the last example on how to use a Fibonacci. Okay, and then okay, some reset point. Okay, the previous high. Sorry, the highest point. Highest point dragged down to lowest point. Okay. If we were to buy Gamuda, seems like okay, now the stock is at the 23%. The Fibonacci point of 23%. So for me, I would rather wait at 50. Okay, 50. So this is actually how we draw the Fibonacci from the highest to the lowest, 0 on top, 100 at bottom. Then we decide our strategy at that point. So we try to see which point is actually consists of a lot of resistance and also support. Okay, so I think enough for our example. So I'm going to go back to my slide. Okay, so I'm going to share about some examples in chart nexus. Okay, we go through that. So now we look at some of the strategy during the bear market. Okay, so for our strategy in the bear market, let me just have my pointer out. Okay, some of the strategy in our bear market. So just now we talk about strategy. Okay, I always mention that strategy and operation are two different set of things. If you heard my webinar before, I always emphasize on this strategy and operation. Let's take an example. For example, me and my friend, we say, okay, let's say if, for example, let's say if Nestle falls to 100 ringgit, okay, the stock price falls to 100, then let's just, what do you call that? Let's just aim at 100 ringgit, we buy together, okay? we aim to buy Nestle at 100 ringgit, me and my friend. So one day, when something happened, Nestle really dropped to 100 ringgit. That's our strategy. We say fall down to 100, we buy together. But one day, if we really falls to 100, then me and my friend will be panicked. Right? Definitely, Nestle now is 140 or 120 something, falls down to 100. Then that's our strategy, but our operation will be different, right? So I tell my friend, okay, now drop 100, let's buy Nestle together. But then he might have a second thought, or I might have a second thought. Let's say my friend is busy for his wedding, so he said, oh, sorry lah, I need to prepare my money for wedding, or I want to go travel, so I don't want to buy. So it's completely two different things. Investment is all on our own. Okay, we have a lot of strategy. It's okay, strategy is okay to be shared, but then the operation is always on our own. So even though you have sweet promises among you and your friends, it's always different when it comes to operation. Strategy, everyone agree. Your friend also agree that. My friend also agree that when they say falls to 100, let's buy this company. Good dividend, good dividend, and then also high performance, high growth. Sorry, not high growth. It's a consistent growth. Everyone drinks it. It's in demand every day. Whatnot. So when it comes to operation, it's always different. Okay, so keep in mind that strategy and operation is two different things. Let's not mix around. Okay, strategy is strategy. We always know buy low, sell high, buy low, sell high. But then how low is low, how high is high. So it all depends on our operation. Okay. So these are the strategy that I will be advising during this time of market. So Fibonacci at 50 or 62. Okay. 50% when it got from 50, it falls 50% from the highest point, or 62 from the highest point. So this will be my point. Okay, 50 and also 62. So this is my own personal preference with some analytics and some data that I have. So I come to a conclusion of 50 and 62. Okay, 50, when it retraces 50% will be my first bullet point. Okay, so now for the stock that I'm investing, I always have, like, if I want to, for example, if I want to buy Bursa, I always prepare like 3 bullets. 50, I have my first bullet. Okay, 62, I will average down. Okay, these are my strategy as of now. 50, first shot. When it goes down to 62, another shot to average down. Okay, then we couple our Fibonacci with some of the candlestick patterns. So I'm not going to talk about the candlestick pattern or the strat. Or some indicators in this webinar. So, but some of the useful candlestick pattern that we can use, for example, for our hammer, okay, or also bullish engulfing. I prefer to use hammer or also bullish engulfing is because for me, these two type of candlestick pattern for me is like the strongest reversal. If it falls down, okay, well, let's say if a stock is a price is if a price falls down at Fibonacci 62%, and then I saw a hammer, a candlestick pattern, a hammer. So I will be comfortable to buy because I know that from my past experience, okay, hammer is a good reversal. Okay, but then definitely hammer comes with the volume. If you look at my previous webinar when I talk about price volume analysis, so I would like my chart to have a hammer together with a strong volume, because the volume validates the price and the action. So it will be a good point for me. I'll be more confident, okay, to to enter the stock. Okay, so when I couple this strategy, Fibonacci, candlestick pattern, or price volume analysis, or you have a double bottom or double bottom or a W bottom or ascending triangle, whatever strategy that you want to use, but it comes from the Fibonacci first, 50, 62, and then couple with the candlestick pattern. Okay, so there will be two outcomes. After, let's say, our strategy fails, 50, we go into 62, we average down, and then the stock price continues to fail. I mean, continues to go down. Okay, only two outcome only. It's only fail or success. So let's say if continues to fall down, 50, okay, again, 50, my first bullet. 62, another bullet. I already averaged down. Okay, but then the stock continues to go down. Okay, this is what I would discipline myself to do. Okay, I will either cut loss and I will average down. I mean, okay, 50. Okay, 50, my first shot. 62, I average down. If let's say continues to go down, I'll just cut loss. I will not average down anymore. Because I mentioned just now, when I want to buy a stock, I will divide to 3 bullets. So 1 and 2, okay, 1 and 2, oh, already the third bullet, most probably I will not be using it unless I am very confident that that stock's revenue and net profit gonna grow. Because the stock price will always go up when revenue and net profit goes up. Okay. In my previous webinar, I also have a few examples when revenue grow, when the company announced a growing revenue, double-digit growth, revenue up, net profit up, stock price will go up. But then nowadays, in the past like 4 to 5 years, sometimes when a company announce good revenue or good net profit, the stock price never go up. It will continue to fall. Okay, so that's why I divide to 3 bullets. The last bullet I seldom use unless I am super duper confident with some analysis that I have done. I'm super confident that I'll be averaging down. But at this moment of time, in this bear market, I would suggest 51, 50%, 1 bullet, 62, 1 bullet. If it fell again, we cut loss. Okay, we cut loss. And then let's say if it's a success, 50 rebound with a candlestick pattern, hammer, bullish engulfing. So we can either take profit or we hold. But I would not suggest to average up at this moment of time. Okay, because now the market is quite volatile, and now most of the time our market is going sideways. Seldomly it can go up in 1 or 2 days. Okay, so to average up is not a suggested. It's not a suggested way, modus operandi. Okay, so strategy now we are aware. Fibonacci 50 first bullet, 62 first bullet. If we can couple up with a good candlestick pattern, hammer or bullish engulfing, or double bottom, or cup with handle, yeah, that would be a good operation for us. Okay, and okay, I'm just going to share about like some of the candlestick pattern, because these are my examples from my previous webinar that when I talk about the candlestick patterns. Okay, when we look at this Aventa, again, this is an old example. Okay, so this is a bullish engulfing. Bullish engulfing actually means that when we see the white candle and then the red candle, so you see the white candle actually covers all the whole the black candle. Okay, so if you look at the volume is actually higher than the previous day's volume, meaning to say on this white candle day, there's a lot of people buying in. If we look at price volume analysis, it's actually tallies. The price go up because a lot of people buying, right? If a lot of people selling, we will not see the candle go up. It will be falling down, closing in zone 1 or closing in zone 2 or zone 3. Okay, so this validates something. On this white day candle, a lot of people buying, so that's why the stock price goes up. And then the area of this candle actually engulf the previous day's drop. So this is a potential reversal already. Okay, then we see the next day, the volume is higher. And then the stock price goes even higher. Okay, so meaning to say these two days, a lot of people is buying the stock. Okay, so how do we know that when those people buying the Aventa stock sell? When we see that there's a high volume, uh with a long black candle which engulf through, then we know that people are selling. But then at this moment of time, we still have not seen anything like that happen. Meaning to say, people who are buying the stock, they are still holding the stock as of November 2020 at that time. Okay, so when this happens, so if you see, if you look at the volume, yeah, people are still holding, people are still going in to buy. Okay, In fact, if we see back previously, you see when the Aventa 1.5 it grows until like 5 something, I can see a lot of people are still buying and then they still haven't sell. If you see, if you know about our price volume analysis and then the closing candle of zone 1, zone 2, zone 3, so it's actually quite a useful tactic. But then when it falls from 5 to 2, we need to say something wrong already. So but then in terms of the chart, it still looks good. People are still holding it. Okay, so this is just to talk about our bullish engulfing. Then next we talk about this is also another example of bullish engulfing. Okay, when the candle when the bullish candle covers the bearish candle. Okay, yep. Okay, then now let's look at okay, combining Fibonacci also candlestick pattern, like I say just now, this is an old example. So top to bottom, 0 and top, 100 at bottom. So the Fibonacci actually helps us to draw out a good support and resistance. So if you're aware, Escaram is a counter which is affected, I mean positively affected, or I say is the revenue is driven by COVID. Okay, because they are doing the hand formers. Okay, the hand formers, those formers are dipping into the latex and then they produce the glove. So SKRM is actually doing hand formers for the glove counters. Just some background. Okay, so this is the chart. Top, bottom, 0 on top, 100 at bottom. So we draw the Fibonacci lines, and then let's say we are looking for the point. Where is the rebound point that we want? So like I said just now, 50 or 62. 50 maybe, 50 I have my first bullet. Okay, and then 62 I have another bullet. Okay, so I will be more confident if you see this. There's a bullish engulfing, and then with the candle with the volume higher than the bearish candle. So this will be my comfortable point to go in. Let's say assume I buying at 50%. So if we trace to 62%, I'll have another bullet. But when I saw this with a bullish engulfing, I am very, very comfortable that it will continue to go up because of the candlestick pattern that I have. So these are how I combine between my Fibonacci and also my candlestick. Okay. So these are the golden rules that I have. So first we set a target. Like I said, we need to consistently stay in the game. Stay in the game here. We continue to read the financial news. We continue to monitor our stocks, or we continue just to be active in the stock market. Because when the opportunity came, we know what counters we need to aim. So first, we'll identify stocks that benefit in the bear market. For example, in the previous COVID, the glove, definitely glove, the healthcare segment. Then they will identify the fastest sector that will recover in the market. Okay, for example, like I said, banking stocks. Okay, it's the fastest sector to recover in the market. And then we identify sustainable stocks. These are 3 areas that we can actually set target. Okay, bear market happens, benefit. Okay, second is fastest to recover, and we identify sustainable stocks. Sustainable here means that the company's business or revenue or net profit are still consistent. So how do we identify those sustainable stocks? Okay, look at the PE, ROE, dividend yield, or also gearing ratio. So this, of course, the PE, ROE, dividend yield, and also gearing ratio, we need to compare its previous 5 years, or we can monitor how is its performance during the previous bear market or economic recession. How does it perform during the previous bear market? Okay, so definitely, if they can sustain through the previous bear, so this year definitely they will also go through pass through these hard times. So low PE, high ROE, high dividend yield, and also low gearing ratio. Okay. One of the samples that I mentioned in my blog last few years, one of the sustainable stocks that I like myself would be Uchitek, a company named Uchitek, which is doing like the coffee machine. So it's dividend is very attractive, very, very attractive. And then its gearing ratio is very low. I think it's a net cash company. Yeah, it's a net cash company. And then its consumer or most of its customer is based in Europe. So things never change even though COVID happened. So the business is still there. So we need to identify more stocks like this Tech company, which is good sustainable. Okay. So once we set our target, we divide our bullets, we average down. Okay. For example, just now we mentioned about our Fibonacci 50, one bullet, 62, one more bullet. Okay. Let's say our plan fails, we cut loss. Do not average up. Okay. Divide our bullets. And then after that, we need to consistently follow up. How do we follow up? Just I mentioned, we stay in the game, follow up, read quarter report and also annual report, follow up on the news, read on the news. Then last is we discuss with our peers or friends or even with me in my Facebook page. Just drop me a message or normally I'll reply. So have some when you are in this investment journey, the investment journey is very lonely. Okay, I know, and I truly understand that. So you have even have friends that can share the not the tips can share the market analysis, some fact finds together. It is very good. Okay, have that pool of friends with you so you can share. Not only just talk about stocks, what go up, what goes down, but your friends that can share their market research, their insight views. Those are the good friends that you need to have in your stock market. In your investment journey, you can invest with your friends. You can also go to the i3 investment, but i3 investment definitely need to filter out some of the comments. Most importantly is to have your own homework, done your own homework, do your own validation. Okay, so these are the golden rule that I would suggest. Set a target. Target will be 3 areas: stocks that benefit, faster sector to recover, and then the sustainable stocks. So these are the criteria: PE, low PE, ROE higher or consistent, dividend yield every quarter they are giving dividend, gearing ratio is low. Example that I can give is just like a company like Tech. Okay, so we can find like similar growth or similar counters like Tech, like that. Role model. Set target just like an Tech. Set target for sustainable stocks just like Tech. Okay, just I narrow down to that scope. Not to say buy Tech. Not to say buy. This is not a buy or sell recommendation. Okay, find stocks like that. Okay, after we set our target, divide our bullets. Enter the market. Look at Fibonacci 50, one bullet, 62, one bullet. If it continues to fall down, we cut loss. Okay, then if let's say it still continue to be there around the area, slowly hovering between 50, 62, then 38, 23. Consistently follow up, read quarter report, annual report, read the news, and then share with your friends. Sometimes I believe when we share, we learn more. When we share, people will challenge or people will give some more insights. So we value those comments, not to be too defensive. People talk back our people talk back about our stocks, then we are not happy, we want to challenge. Take it as a positive feedback. Things that people say might be valid, so we continue to improve on our analysis. Okay, so these are the golden rules that I will be suggesting. Okay, so lastly, continue to remember and always continue to stay in the game. Just like Ronaldo on the bench, then the manager brings it to the field, then he scores and he celebrates with the shoo. Okay, stay in the game. Must consistently to stay in the game. If we are not in the game, when we want to come back to the game, sometimes it will be hard for us. Okay, so that's why stay in the game, have your partner of your friends, pool of circle of friends who discuss about stock. That's important. That will keep you motivated and not to keep you lonely. Okay, remember to stay in the game. Lesson of the day: stay in the game no matter what. Okay, so come back to the questions just now. How to decide low and end point? Okay, again, starting point is the lowest point, and then with volume start to kick in. Okay, simple said, 0 on top, highest point, bottom is 100 at the bottom. Okay, which is the best retracement point? Okay, from highest to the lowest, half of the 50% or 62. we just now we talk about 50%, one bullet, 62%, one bullet. Okay, so how do I operate buy and sell? So let's say if it's for short term, can use Fibonacci to identify support resistance. So be disciplined and stick to your strategy. Our strategy mentioned that 51 bullet, 62 one bullet, continues to fall down, we cut loss. Okay, so this is my suggestion. Okay, so I think that's enough for my sharing today. So I'm gonna go through introducing the Bursa Equity Trading Simulator. Okay, I just go through the ETS. Okay, I think we need to be grateful to Bursa because they actually have a simulator for us. They have a simulation for us on how to buy and sell using virtual money, not using our real hard-earned money. So this is just like a simulation in which it's good. So okay, how do we actually have this how do you call that, the simulation? Okay, let me just log out mine so that I can put the I think a lot people are still new in stock market, maybe in this forum. If you are new in the forum, maybe you can take a few minutes just to listen. Okay, once we open, this is the Bursa Academy. Okay, Bursa have a lot of programs, a lot of learning education platform. Okay, just waiting for us to explore. What we see in the market now, what we want to learn from the public domain, YouTube, we can also learn. But Bursa had also helped us to filter and also help us a lot in our investment journey. Okay, so things to take note, not only from YouTube, from Bursa, we can also learn a lot. Okay, so in this Bursa Academy, we just click on Bursa Academy, then you see there's a lot of advertisement from top to bottom. Okay, let it go through. Okay, so there is one which is the equity trading simulator, the ETS, so a risk-free virtual trading experience. So we just click in practice now. By right, you will need to do a login. If you haven't do a login, you just create an account. Okay, so I'll be like spending like 30 seconds for those who wants to create an account or whatnot. So another 30 seconds for those who you, if you have any question, you can write in the Q&A session, so we can answer that later. So for those who haven't want to explore the ETS, I'll just give a 30-second while I drink some water, so you can explore, create an account first, and for those you can just create your type your questions out. Okay, so if you already logged in, so this is the basic platform. But before that, okay, let me just go through what I will be sharing on ETS, Equity Trading Simulator. Okay, sorry, I forget about this, my slide. So okay, this is the web page, Bursa Academy, Bursa Marketplace .com home. So when you look at it, remember there's a lot of advertisement, right? You just need to wait until, okay, or you can just click on the bullet points until you see a equity trading simulator. Then you click practice now. Okay. So okay, because just now we talk about Fibonacci retracement, right? So I'm going to share how do we activate, how do we summon out the Fibonacci retracement in our Busa Academy. So the front part, I mean the above is the one that we'll see in our analysis tool later. The below is when we, because normally it's too dark, we cannot see anything, right? So I will change it. I will teach, I will guide you through how do we change the background, the black background to white background. Okay, and also adding in some for example simple moving average. If you have time, then I'll go through it. If not, you can visit through the previous webinar that I have with Busa. So I also step by step I teach inside there. Okay, so this is basically some of the, this is a platform, and then some of the indicators or some of the directories that I would like to share. So here we have things we call about control panel. We have the quote, watch list, stock info, chart, buy, sell, news, analysis, which are very useful, but okay, which are very useful, but seldom people use it. Okay, later I'm going to share about this control panel. Then we have the highlight. This is the highlight of the day. You see the Bursa, whether it's going up or down, how many trades, how many volume, how many stocks are actively traded, okay, how many stocks going up or down. Okay, these are all the highlight. The highlight is important for us to decide whether we want to buy or sell. It affects some of our emotion for the day. If we know that today's market is very bearish, the market drops more than 50%, 50 points or 60 point, 70 point, we will know that this day is not a good day to do trading. But for investment, for investing, it might be a good day. Okay, so this highlight is important for us to make decision. Okay, then we have the window. You see there's 3 window here. 1 window, 2 window, 3 window. This window is actually the quote screen. Here we have all the stocks. Second is the analysis of the chart. But then this analysis chart is small. We can bring it to the full screen. Later I'll teach how. And this is the stock info. So these are 3 different windows. Okay. Then we have the tab. If you see, there's a tab, just our Google tab or our internet browser tab. I can have quote string tab. I can have analysis tab in the same window. Okay. I can also have the stock info in the same window. Okay. So I'm going to talk about that also. So some of the important signs. Okay. I think I just go through because later we're going to explore it also. We have pop out, we have combine, full window, floating window, collapse, and also expand. It's okay, no need to remember. We just try and error because most of the time also I also don't remember. I just try and error. Okay, so how to basic maneuver our trading platform. So I'm going to talk about how to change the layout, how to add the stocks in our watch list, and how to add in the technical indicators for Fibonacci, and change the setup in the chart analysis, and how to buy and sell, and the order status, and also portfolio viewing. Okay, so let's, oh, I'm perhaps Nadira, how much time do I have until for the Q&A?
10 minutes, 20 minutes, something like that.
Okay, yeah, okay, sure, can. I'll just stop at around like 11:45. Okay, let me just bring my slide. Okay, first we change your layout to our preferred look. Thanks, Nadira. Okay, so we look at this is how my my platform looks out at the moment. I have 1 window, which is the quote screen. I have 3 windows below. I have intraday chart, market depth, and also order pad. Okay, so if I want to change my layout, I will go to setting. See, in the setting, there's a layout. There's a user interface, it's a font, it's a thread. So we look at layout. It depends on what you like. The one I show in my slide is actually like this, three layouts. Okay, if you want the whole screen, also can. Okay, whole window. This is 4 window. Okay, this is 4 square window. It depends on you, what you like, which suits you the best. There is no such thing as the best, but you can definitely find the best method that suits you. Okay, the keyword is which suits you. Okay, for the moment, let's say I try this 1 big window and then 3 small windows at the bottom. Okay, I can just click apply. Okay, so I can also change what I want. Let's say now here I put intraday chart. market depth, and also order path. Okay, then if you notice that there's a green color, and also green color. So meaning to say all of them are connected. For example, let's say I click on one of the counter, Nestle. Okay, something wrong with the okay. When I click Nestle, so when I click the Nestle, do you notice that all the counters here are changing? Okay, the green, because it changed because this is the major screen, the major window. So when whatever I click, the down here will follow. Okay, let's try another let's try Penta. I click Penta, I enter. All the list, the call warrant will be coming out. If there is a company warrant, it will definitely come out. So when I click, you see the bottom here all change. Okay, Penta. Okay, so this is how we use, I mean the green. Let's say I do not, let's say I am intraday chart, I want to look at FBM KLCI. Okay, for example, let's say case study, I want to buy Penta, but then I also want to monitor the technology stock. I don't think so. There is an index here. It's okay. Okay, peer-to-peer review. Let's say I want to look at Inari also. Okay, let's say I can change this to another color, red, which this will not be affected by the window. You see, when I click the Penta, only the green ones will follow. Okay, the red one is independent. Okay, the color coding is important. Okay, so now let's say I put in group 2, so I connect together again. Okay, Penta, so everything move. Okay, so I'm going to skip through some of my teachings just now. So okay, now let's say if I want to buy, if you see this is the counter. Okay, and then I have this is the market depth in which I can decide how much I want to buy, how much I want to sell. Okay, this is the order pad. Okay, I can actually buy or sell, depends. Okay, so just now before we enter the webinar, I actually do some buying. Okay, I actually bought Penta at 4.03, and then if you see the status, it's filled. Okay, now let's see. Now let's try to buy another counter. Okay. Oops. Okay, let's try to see another counter that we have. Let's say that we try to buy MYEG. Okay, MYEG, I click in. I want to buy. Okay, let's say, okay, I queue at, okay, I want to buy how many lots? Let's say I want to buy 10 lots. Okay, the price is 0.815, let's say. So things to take note, when I click buy, I will not necessarily match or fill. Okay, it's okay. So my EG, I want to buy 0.815. Okay, which is 815. Okay. Okay, let's say I want to buy 100 lots, 100 lots, which is around 8.15, 8,100, 8.15. So I click OK. So I have queued the order. There's a ticket number, blah, 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 blah. Please go to order book. So I go to my order book. So if you see that, if I already queued, I already made my order, so it will be queued. So if let's say it's already been filled, you can say, you can take a look, the word is filled. Filled meaning to say your order had been filled. If your order had not been filled, it will come out with the word queued. Okay, so this is how we buy and sell. And then even though we look at the stock market, we look at the price, we look at the price, a lot of people are selling. It's 0.815. There's a lot of people selling because this is a simulation. This is a simulator platform. Even though I buy at the selling price, it will not match because the matching will be based on the actual trading platform. Remember, this is a simulation. Okay, the actual buy and sell will be reflected based on the actual trading. Okay. Okay, so now we jump to the analysis chart. So if you right click, okay, now we're looking at MIG, look at the right click, then we have the analysis chart, click on the analysis chart, then it will bring you to, it will pop up another window. Okay, so if you want, I can just bring it to full screen. Okay, I want to bring it to full screen. So it's now, you see, quote screen, there's an analysis chart. But okay, now I want to bring it out. Just try to explore yourself, no problem. This is just now, this is the one, bring it to the main window. Okay, but I don't want it. I want to be at full screen. So I just click. This is a full screen. Okay, just now in my chart, I'm using Chart Nexus. Okay, now for this Bursa Academy ETS simulator, it's using the chart from TradingView. Okay, it's using the chart from TradingView. So now just I mentioned, too dark, you cannot see anything. So now let's say that I want to change it to white background, easier for us to see. I go to properties, and then I look at the background. I change it to white. I change to white color. The vertical grid lines also to white color. Horizontal grid lines to white color, which make it better to see, right? Better for us to see. Okay, now we're coming back to our chart. To our Fibonacci. So we draw back to our reset point. Reset point would be most probably for all the chart will be the lowest point. So we take the highest point, which is here. So I want to go to, so you click something like a pitchfork here. Pitchfork, then we go through Fibonacci retracement. Okay. But this one is a little bit different, because if you see this one, okay. Okay, nice. Just now I mentioned 0 at bottom, right? 0 at top, 100 at bottom. So Fibonacci in chart in TradingView is different. The 0, so just now chart analysis is from top to bottom. So for TradingView is drawing from bottom to the top. Fibonacci retracement from bottom to the top. Okay. Yeah. Okay. So 0, as long as the 0 is on top, 100 is at the bottom. So from the reset point. So okay, now let's look at this. Well, TradingView actually got color, which looks nice. So okay, so you see MIG actually falls to the support of 50, which is 0.728. This is a very nicely drawn. Okay, 50%, and then see it tries to go up, the resistance, break the resistance of 38, successful, go up, challenge again the next resistance, 23%, then it falls down to the support. Try to challenge again, fail, so it now falls to the support again. So if we follow to our SLB standard of procedure just now, 50%, one shot, 62%, one shot, falls down again, we cut loss. Okay, so this is how we summon out Fibonacci retracement in the chart. Okay, so now bring it to the tab. Okay, so what else I would like to share about the ETS? Change the setup. Okay, we already learned that. Indicators, we go out already. Stocks in watchlist, this one you can explore yourself. Right click, look at the watchlist, it's okay. So order status, just now I showed before, go to order book, we see the order status. Okay, for example, my EG just now is queued, right now it's already partially filled, meaning to say I want to buy 10,000 shares. I already filled 8.2 shares, so it's another 1.8 which haven't shared, which have not been filled. Okay, filled already. Okay, now it's fully filled, so we can see it's filled. Okay, so when we look at if we want to look at how many shares that we have, I just look at portfolio, equities portfolio. Then you can see these are all the stocks that I have bought using my virtual simulation. I have bought my EG, I have bought Penta, how much is the market value and how much I have gained. Okay, So I'm now my total loss or gain is 21 ringgit gain. Okay, so meaning to say this, if you haven't hands-on in the real market, ETS, equity trading simulator, is a good platform for you to learn, but learn about the basic first, how to buy and sell before we enter the market. I mean, before using your own hard-earned real money. Okay, so I hope, yeah, I think this is my I'm gonna stop here, but before I go to Q&A, there's just one slide I want to share. Okay, voting is coming soon, GE15. It's time to vote, and I want to ask everyone to go and vote. So take your chance, not to change your vote. It's actually not to change your vote. It's actually, I would like to emphasize that it's time to vote. Do your part as a citizen. Go out and vote. Cast your vote. Okay, go and cast your vote. If there's something that happens that you cannot go through, it's okay. Make sure that we do our responsibility and duty as a Malaysian for the next generation. Okay, so Nadira, sorry I talked too much. I pass back to you.
Okay, thank you, Mr. Johnny, for sharing just now. Let me share my screen first.
Yeah, sure. Thanks.
Okay, so now we will enter the Q&A session. So anyone who has your questions can type your questions in the Q&A box. So I will read your questions in a moment. Okay, first questions. In the trading platform details, what do you mean by opening trade?
In the trading platform details. Okay, let me just glance through. John, I do not actually understand your question about that, but let me just. Okay. Sorry, John. Can you elaborate further more on your question in the chat? Maybe later I'll go through that. So for the time being, Nadira, can we skip to another question?
Okay, so can you check on DNO?
The stock can. Okay, I read the question MPI also DNO. Let's look at that later, but there's another one more question. Maybe we go through later. I will share in my chat access. Let's go through the question from Hanizam, Nadira.
Okay, how many % to cut loss?
Okay, Hanizam, thanks for your question. 50 first bullet, 62 another bullet. So if it continues to fall down, we cut loss. We continue to cut loss. Okay.
Okay, questions from John Buck. How to maintain the chart setting that I changed?
I think I answered. Yeah, John, thanks for the question. I answered that already. We can save your layout. Okay. So, Nadira, let me just share screen balik. Let me just reshare my screen because there are two questions, right? To look at the stock. Okay, so let me just reshare screen. We look at DNO and also MPI. Where is my share screen? Okay, share screen. Okay, so just now coming from David, look at DNO. Let's look at DNO. Again, how I drag from 2020. Okay, so Fibonacci from 0 on top, 100 at bottom. Okay, David, if you are here. So if I were to buy, okay, 50 sounds like a good point. If I have not bought the stock, 50 will be our SLP, 50 one bullet, 62 another bullet. But you see now the stock is around like 38, right? So if you have 38 Fibonacci point, 38 seems like a good resistance or a good support. So if you have some market research on this, 38 is a good support or resistance point. Okay, so you can buy at 38, but depends on you. But for me, I will rather wait at 50 because of the political reason that we have now, and then the global because the world is changing, the interest rate also will affect some of our decisions. So I would rather wait at 50. That's my suggestion. I know that DNO is quite fascinating, a lot of insights, a lot of information, a lot of prospect. But for me, 50 is still my point. Okay. Just now there's another question about MPI from Patrick. Okay, MPI, let's look at the chart. Okay, MPI again. I drag from the reset point top. Oh, sorry. From the top to the bottom. Okay. 62 is a good point. You will see now the stock already rebounded at around 62, around 24 ringgit. So it's now going up. Okay, so Patrick, so hopefully I answered your question. So coming to John's question, how do we actually save the layout? Okay, let me just bring out again. Okay, John. Okay, just now at the analysis chart. Okay, let me just bring it to the full. Okay, sometimes there's glitch in this simulator, so let just bear with it. Analysis chart, which I already summoned it out, but then there's no. Okay, MYG full screen. Yeah, I think there's a save, if I'm not mistaken. Okay, let's say okay, again I change my properties to background. I want it white. Vertical grid lines white. Horizontal, I make it right. Okay, then I draw my Fibonacci point. Sorry, I just repeat what I shared just now. Okay, Fibonacci retracement from 0 at the bottom. Yeah, and then 100 at top. So coming to John's question is, how do I actually save? I remember there's a save. Sorry, John, I don't quite remember. But once I know that, I'm gonna share it in my Facebook page. Sorry, I cannot remember as of now. But if I do, I will share it. Okay, I saw it already, John. On the right hand, there's a cloud with an arrow going up. So this is my save my layout. For example, I save my layout at GE15. GE15, okay? So I can load my chart. Okay, so if you see previously, I also have a few chart, which is the moving average, in which if you are aware of my previous webinar, I like to use the moving average of, okay, it's supposed to be 20 and 40. Okay, so once you do it, you can actually save your chart, and also you can load your chart. Okay, so John, hope I answer your question. So yeah, Nadira, back to you. Can we read another question?
Okay, for Fibonacci trace, the lowest point and highest point is best covering how long period of data?
Okay, Vic King Lau. So my recommendation will be, as long as from the starting point, which is in the March 2020 until the recent high. So that would be the range that we're looking at. So meaning to say, you will keep on continue to like revise your highest point, because your chart might be continue to go up to create new high, to break new high. So as long as your original point is the reset point, so it will go up. In a few situation, I think in some of the chart we even saw the reset point, the chart actually falls below the reset point. So we just omit the reset point as long as the lowest and the highest. Okay, because Fibonacci is helping us to decide the range between the lowest and the highest. So as long as we determine where is the lowest, where is the highest, then we draw the Fibonacci, and then we wait for it to rebound. If let's say it retrace, what are the retrace point to rebound? So those are the points we'll be waiting there. Yeah, so hope I answer your question, Vic John.
Okay. Questions from Gary. How to become a long-term runner winner in consistent way in Bursa?
Oh, Gary, this is a tough question. How to become a long-term runner winner? Okay, to be honest, I think if we want to have a long-term winner, the best method to go for me, because I'm a part-time investor, the method that I'd be gladly introduce and recommend will be using fundamental analysis. Okay, I always tell my friends and people around me, if you want to win big, okay, we go for technical analysis. We go for fundamental analysis. We read the financial statement. We go to dig out and study the fundamental of the company. If you want to win fast, earn quick money, technical analysis is the tool to use. So, as an investor in this modern day, all the information is easily available. All the knowledge is easily available. Technical analysis, fundamental analysis. So it's very important for us to master technical and also fundamental analysis at this modern time. Okay, so we need to master both, and then keep note that if we want to earn fast money, technical analysis can help us to do that, but with discipline. Okay, if you want to earn big money, okay, fundamental analysis is the one for us to go. I always like to share one of the example that I like to use. For example, if you notice my Facebook page, one of the counter that I will keep on mentioning is, and one of the decision in which I'm happy that the counter that I had been bought for, I think 8 years ago, is a company called Lihan. It's a furniture counter. The reason why I buy it at that time, the reason I buy is the reason I sell. The reason why I buy into Lihan that time is actually I realized that the dividend yield for Lihan is more attractive than the fixed deposit at that time, and even now also. So when I know that dividend yield for Lihan is much more attractive, so what I do is I withdraw the money from my fixed deposit and I invest in Lihan. So I think I waited for almost 10 years, 2012 until 2022. So I hold the stock around like more than 10 years. So the dividend had been quite attractive. So the reason for me to sell Lihan will be, one day if I notice that the dividend yield for Lihan is lesser than the fixed deposit, that will be my moment to sell. Lihan's earning and net profit revenue had been quite consistent throughout all these years. Even the market is up and down, COVID also, Lehman Brothers cases, everything. Lehman Brothers is before. I mean, the oil price up or down, Lihan had been quite consistent in terms and quite generous in the dividend. So if I were to sell, my Lihan would be if fixed deposit is higher than Lihan's dividend yield. Another strategy is I will most probably switch to another counter with a good dividend yield, which is higher than the fixed deposit. A few companies to name, Uchitech can be one. Another one is the Telework, which is also good, and every quarter they give dividend, and also some of the REITs counter that you can monitor also. So it all depends on your strategy. I mean, the reason you buy, which for me, my reason to buy and my reason to sell must be aligned. So if my reason to buy is no longer there, that will be my reason to sell. Yep. Thanks. Hope I answer your question. Yep. Nadira, maybe you can share your screen back. I just.
Okay. Okay, next questions. Other than Bursa Academy, what are the learning resources would you recommend?
Okay, in the Bursa Academy, there's a lot of webinars in which one of it is the webinars that we have, and then there's a lot of e-learnings whereby you can learn, you can get your points there. So those are the things that you can explore also. Webinars is definitely one of it, and then the e-learnings also there.
Okay, I think last question. John said that he meant in the trade detail. What is meant by opening trade in the remark column?
in the trade did. Uh, Sorry, John. I think you are referring to some of the features in the ETS. It's okay if you can drop me a message in Facebook Messenger. You can snapshot so that I can explain further. Yeah, sorry, John. I'm not able to answer your question. Sorry for the time being. But
Okay,
I welcome you to drop me a message in the Facebook so I can answer that.
okay, last question. After setting the Fibonacci retracement, when the price falls below the original 0% point, when do we reset?
Okay, when if you already answer yourself, Grace, if it falls below the 0%, so we need to, because remember, Fibonacci is drawn between the highest and the lowest point. Let's say if our chart falls below that 0, so we need to redraw our lowest point. So that whenever it falls below, so we need to redraw. Yep.
Okay, I think that's all for our Q&A sessions. And thank you for Mr. Johnny for answering the questions.
You're welcome.